Good morning, it's Jonathan Barrett with this week's Market Buzz, and the war does not let up. Still lots of things happening there. Day 30, Houthi rebels decide to join the Yemen. Houthi rebels from Yemen decide to join the battle. Quite an interesting side there in terms of what's happening there. I'll allude a little bit more on that. The whole conflagration just seems to be moving and spreading in the region, which is a worry. So we're hoping that some solution will come together. Remember, Pakistan has said that they'll open their doors to negotiations. On the month, the S&P was down 7.5%, Nasdaq down the same, and also the Dow down the same, extending that weakness from the week before. So quite a massive correction there. As we can see there, these inflationary forecasts, remember on the month, crude oil is up around about 55%, WTI up around the same, Brent up a little bit higher, and also apart from that, all your heating oils, your natural gas, everything is up. So there's going to be some pretty intensive inflationary concerns out there at the market. When it comes to Trump, he's extending the infrastructure bombing deadline until the 6th of April. Let's see what happens, applying more pressure. He also said the Pentagon is considering deploying 10,000 troops. Apparently there's always 8,000 already there, or pretty much there. So that's more pressure. But on the flip side of the contagion, University of Michigan consumer sentiment fell sharply to 53.3. Year-ahead inflation expectations rose 3.8%. That's the largest monthly gain since April 25. And Brent, I guess has been up 4.2%. Gasoline also higher as well. Okay, and China opened trade probe against the US in retaliation to the US tariffs. So quite some interest in there. Also, RBA chief says rates might continue to go higher in Australia. Okay, first of all, going back to the war, I think that the fact that the Houthis have sort of come into play means that there's more risk around access routes around the Red Sea, especially through the el-Mandeb Strait. That to me is also an issue because with that there you've got another 5 to 7% of global oil actually past that. That's also access to the Suez Canal. So there are lots of other things that could develop there. And I think when you see that now there's potential constraints at that strait, there's also potential, or the constraints are already at the Straits of Hormuz, and that's going to account for around about 20% of the oil. Now, I think the interesting thing here is whether the international community is actually going to look towards this, whether the international community is going to say, well, okay, we can't have this, we need oil. What deal is being done? Apparently there is a deal that's being done, in Iran, between Iran and other buyers of oil, where apparently 20 ships, oil tankers are going to be let through. I think this is quite interesting, and of course will be quite destructive. Because that hopefully will ease the way to some form of negotiation. But I think if anything, that negotiation is going to take a long time, like it's going to take a long time. If you think negotiations prior to the nuclear disarmament, that's forever ongoing, so I don't see this really actually coming out very quickly. So with that, we potentially might see troops on the ground. We might see further missiles on infrastructure in Iran as the US tries to turn Iran around so that they get a new regime. Now, interestingly also, we haven't seen a lot of internal news about what's actually happening within Iran. And I think to me that is a worry. There's obviously been a media blackout, but you'd expect to see some things start to leak out. Is the local community behind the demise of the current government? Does the local community sort of feel that they want to have a change of regime? So it's really interesting to see that we're not actually seeing that, and that to me is a little bit of a concern. So when I look at it, I think that this war is going to continue. Iran will not give up. They will keep their land. The US have sort of invited themselves onto this war, and they need help. The NATO allies have said, well, we're not going to really help you. You did this by yourself. So really it's going to be quite interesting as to see how this outplays. I think one of the important things here is whilst it continues and there is potential for less oil to go through these two straits, then you'll find that oil prices will continue to maintain inflationary pressures throughout most economies will start to pick up.
Remember, when you do look at it, the price of oil, if you think that on the month, it's up around about between 50 and 60%, depending on the type. Now that will filter through the economy, and that will filter through to higher prices, transport, everything. So that is highly inflationary, and I think it's quite interesting to see how that inflationary forecasts, will now start to feed through, and we'll actually see some numbers, and whether that'll be a concern. In Australia, we've already seen the RBA act. They already put interest rates up, and I think if anything, the governor has said that, well, look, if it still remains a concern with inflation, we'll put rates up. Not to mention that we are potentially entering into a stagflation period in Australia, and that is a concern across the board. I mean, I think one of the big concerns, and I've reiterated that in this week's report, is that when you look at what's actually happening in terms of inflation, and you look at the Australian interest rates. Now, when Australia, during the contagion, when rates were very low, near 0%, we saw inflation started to shoot up to around about, 7%. Interest rates were still quite low. Then they started to move higher. Now, the interesting thing here, and one of the big take-homes, is that we have a resurgence in inflation whilst interest rates are around now 4.1%. Now you pass that on to the consumer and it's up around about 7%. So there's a real chance that a lot of pressure is now out there on mortgages, just general debt, and also sentiment as we know, is quite low. Another thing to consider is expectations for inflation are up around about that 5%, now. And I think that to me is a concern, because what does that mean to interest rates? Does that mean we should be around about 4.5% through to 5%? And that to me is more of a concern, because that's going to potentially cause the stagflationary environment that we're living in now to actually move into the potential for a recession for Australia, which is going to be a shame, because we seem to have dodged the last ones for quite some time. So keep close to that, keep close. Obviously it's all contingent on what happens in the Middle East, but Australia and the RBA certainly in a very unique position, or a tough position to be in. Also, we're seeing China starting to slow down again, so that further doesn't help our cause whatsoever. Okay, so that's it. So let's have a look at some of the positions that we're looking at, and I think just when you look at it, I guess the positioning. We're long, re-entered the oil position. We're currently long, cautiously long, and looking for it to trade higher. Lots of volatility. Currency front, we remain long Aussie US and Aussie Swiss. Now, at the moment, both those pairs are under pressure. There is weight towards the US dollar. Whilst there's weight towards the US dollar as a safe haven, the Aussie is not going to perform that well. Also, China out there not performing as well is going to hurt the Aussie. That is the case. But one thing that has happened is that Australian currency has a higher interest rate than the US. That should support yield plays. So I do actually think that after this sort of bump, which we're going to see in the Aussie, and it'll trade lower, things should start to come good again, certainly because of that interest rate differential. Anyway, let's see what happens from there on in. Gold and silver, we've been in and out of there. We're long at the moment. It's right at the lower end of the range. I think if we get more of a risk-on type of thing, a safe haven status play, then I think people will go back to gold and silver. And then they've got to look back on gold and silver after that inflationary issue as well. So I think if anything, that will continue to unfold. Also, remember, we're long, still in the weak position, and we're still short on equity markets. So I think if anything there, on the equities, we're remaining quite short. I'll just see if I can pull up a few charts, and I'll just share this and we'll run through some of them. At the Nasdaq once again under a lot of pressure, as we can see, and probably inclined to think that will remain until we basically, that will remain under pressure. Momentum indicators are still on the low downside, still low here, pointing lower, so expect further losses. Good support at this level here, 23,000. A breakthrough there does send it lower. Mind you, it can come a lot lower if need be. Let's just try to go back. There we go. Let's try and squeeze it a little bit. Yeah, once it breaks through 23,000, it can go a lot lower. When you look at the S&P 500, pretty much the same. Everything's pointing lower, although if you look at it on a daily basis, it's all going lower. It's all going one way.
So that's not very good at all. Okay, let's look at gold. Gold 45.07. Momentum indicators are down. We've pointed up a little bit. Would like to see more, and then a blip back to the top. There's no reason why that can't go higher yet. Those inflationary issues will be here. It will be an issue. There will be a store of value. When we look back at the silver price as well, as you can see here, once again on the low, looking forward for that little guy to trade higher. Dollar index, okay, right at the highs there. That's why the gold and silver have been where they are. So hopefully it continues to trade lower. It makes sense for that play to occur. It makes sense for the US dollar to weaken, but let's see what happens. Okay, good old crude. I think crude's quite interesting, as you know. It's highly volatile. Momentum indicators are 4-star way. I expect it to remain quite volatile regardless. And you can see the same rate for Brent. I think one of the interesting aspects here is the difference between the WTI and the Brent contract. It's about $4, $4 or $5, and I think if anything there, eventually that'll come back. It'll continue to widen, but it will come back. So I expect that to be a lot wider from here. And of course, if you look at it, we're also continue to remain long on the wheat trade. So as you can see there, still looking all right. Expect sideways price action, but certainly like it over time. Okay, let's stop. So that's pretty much it from me. Hope everyone has a great week's worth of trading. Keep your powder dry, lots of opportunities. Talk to you soon. Bye for now.